Hey everybody, this is the week 9 quiz access chapter 4, and I'm looking at problem number 2. Number 2 wants us to record purchases, purchase returns, and purchase allowances. And so I'm just going to kind of go through these and talk our way through them. This tells us that the company uses a perpetual inventory system and that they use the gross method. And so the gross method doesn't mean that it's disgusting, although some of you might find it disgusting. What it means is that they're going to record their purchases at the total cost, and then if they take any discounts, they'll go ahead and record those later. Some companies use what's called the net method, where they record the purchases at assuming the discount, and then if they don't take the discount, they'll go ahead and put that in that they paid more later. So the first one is on April 2nd, they purchased $6,100 of merchandise from Lion Company with credit terms 215 and 60, which means a 2% discount if you pay within 15 days, or net, meaning the full amount is due within 60 days. And it was FOB shipping point. So we're going to go ahead and record that then. The day we purchase it, it's going to become our property. So we're going to increase our merchandise inventory. So we'll debit merchandise inventory. And we will credit our accounts payable to Lion for the full amount, the $6,100. All right. The second one is we pay $320 cash for shipping charges on the April purchase. So if we're the purchaser, then we're going to add any shipping charges to our overall cost. So again, we're going to debit merchandise inventory, and we're going to credit cash. If you think about it, the cost of getting it to us, right, that's part of the cost of the merchandise. And if it's FOB shipping point, it means it becomes our property the minute we purchase it, the minute they send it to us. And so we're going to bear the cost of getting that to us. All right. On the 4th, we returned to Lion Company unacceptable merchandise that had an invoice price of $600. So on returns, we're just going to go ahead and we're going to now debit our we're going to debit our accounts payable account. Remember, that's a liability. So when we debit it, that means it's going down. The amount we owe Lion Company is less. And we're going to credit our merchandise inventory account. Because again, we're sending that inventory back. We're not going to have it as part of our books. We'll go ahead and do that at $600. We're going to send a check to Lion Company on April 2nd for the purchase, net of the discount and the returned merchandise. So now we have to do a little bit of math. We know we paid $6,100 and then we returned $600 worth. So at this point, we owe them $5,500. But because we paid within 15 days, we're going to get the 2% discount. So I kind of try to set these up in terms of my accounts payable to Lion is going down. So I know I'm going to debit that. And my cash is going to go down because I'm paying out some cash. And then the difference here in the middle is going to be the amount of the discount. And really what's going to happen is we're going to change our merchandise inventory account for this discount. Because remember, merchandise inventory represents the cost of our inventory. And so if we're getting a discount, then that's going to actually reduce the overall cost of our inventory. So my accounts payable is going to have to go down by the whole amount that I owe them. Remember, I purchased $6,100 and then I returned $600. So $6,100 minus $600 is $5,500. That's the amount I owe them at this point. So I will debit that account, $5,500. And when I do that, that means the balance of the accounts payable account should be down to 0 when I debit that $5,500. The cash I'm going to have to pay is $5,500 minus that discount. If you remember, the discount was a 2% discount. So one way to do this would go, say 5,500 times 0.02. That would give me the amount of the discount. And then do 5,500 minus 110 gives me the amount I have to pay them. Other people like to just say 5,500 times, instead of 2% for the amount of the discount, they'll just do 0.98 or 98% of the purchase price, right? That's the amount we have to pay. It's going to come out the same either way. 53.90 is how much cash we have to pay. And so then our merchandise inventory, remember, it was increased with the debit. So we're going to decrease the cost of that inventory by $110. That's the amount of the discount. The cash plus the discount has to add up to the amount that we have to pay them. All right, on the 18th, we purchased $11,500 of merchandise from the Frist Corporation with terms of 110 net 30 on an invoice dated April 18th and FOB destination. So this one, I'm a little more confused about what they want from us, partially because it won't become our property until it gets to us. And so, and it's not telling me for sure if we've received it. I think, though, they still want us to go ahead and enter that as if. Let's see, I'm just reading the rest of these. All right, so I'm going to go ahead and try it and see if it's what they want from us. So again, if we're using the gross method, I'm going to show my merchandise inventory going up and my accounts payable to Frist going up 11,000. The hard thing about only having 3 checks, right? You don't want to check it in case you need that check later. I'll go ahead and check it because I want to make sure I'm doing what they need me to do. And it looks like I am. So that's how they wanted us to record it. And of course, it's not complete because, well, we haven't completed it yet. Let's see. All right, so we got that one. All right. So now on the 6th, after negotiations, received from Frist a $600 allowance toward the $11,500 owed on the April 18th purchase. Businesses often do allowances if they say, send us the wrong stuff. And they're like, don't bother sending it back. It'll be too expensive for us. Just keep it, but we will reduce the cost. Or sometimes if they send us defective items, again, instead of paying the cost to have it returned to them, they'll just give us an allowance. And so an allowance will just reduce the amount of the account payable, reduce the amount we owe them, and reduce the cost to us of the merchandise. Now on the last one, it says we sent a check for Frist paying for the April 18th purchase, net of the allowance and the discount. So because we paid within the discount period, we'll get that full discount. So again, my way of dealing with this is I know I'm going to debit accounts payable, and I know that I'm going to credit cash. And then this part in the middle is going to be the discount, which is going to reduce the cost of my merchandise inventory. Again, so the amount of cash or the amount of accounts payable is going to be the amount that I owe them. So if it was $11,500 and they granted me a $500 allowance, I still owe them $11,000. So when I debit the accounts payable account $11,000, that means that now my accounts payable will be zero. I won't owe them any more money. The amount of cash I'm going to pay them is going to be the amount I owe, $11,000, less the discount. This was a 1% discount. So I'll do $11,000. And again, sometimes people will go times 0.1. That's the amount of the discount. And then 11,000 minus 110. That gives me the amount of cash I'll have to pay. The other way to do it is just to do 11,000 times the amount I have to pay, which is 99% if there's a 1% discount. Comes out the same either way, 10,890 And then the amount of the discount would be $110. And again, I credit that to merchandise inventory because that means I'm going to be reducing the cost of my inventory. Record that entry. I'll use my last check and cross my fingers. And hopefully I got everything right. And it looks like I did. So I hope that was helpful to you. And again, don't be afraid to reach out if you have other questions on any of the other problems.